What if we had a chart that we could look at that has 100% of the time in this bull run predicted what Bitcoin is likely going to do next? Well, we do. We have that chart and I'm going to show it in this video, but most importantly, I'm going to show you how you can read it just like I can as well. It's a very important chart, so if you wake up tomorrow and Bitcoin's up or down, you know what's likely going to happen next based on its 100% perfect track history, so you don't have to be anxious and wait for a video from me or another influencer, for example. Now, I've got that chart, so just hang in for a second, but I've got some more information you have to know about. The more information you have, the better. It's as simple as that. This is Ethereum's chart. Now, why I'm looking at Ethereum and not Bitcoin is because Ethereum, number one, is doing something really, really weird, very weird. And it's important because if Ethereum goes up, alts will soon follow. So by looking into Ethereum, it's basically looking into a proxy for altcoins. It's a barometer for altcoins, right? One really weird thing I've noticed is I'm on the weekly time frame here. We've had 1, 2, 3, 4, 5. This is our 6th week of Ethereum moving practically sideways with these large wicks. Basically, it's an accumulation phase, all right? So after a massive pump, we can see here the volume candlesticks definitely imply this is an accumulation, not distribution phase, and it looks very similar to what's happened back here. You guessed it, December of 2023, in a very similar pattern to what's played out here, a 55% pump. We actually had 8 weeks of sideways action. Again, the candlesticks here, the volume candles kind of indicate accumulation, not distribution, and then we saw a massive explosion up. This was a further 73% move. As the needle begins to squeeze and as we begin to look closer and closer here into possibly alt season playing out, which of course means that others, which is altcoins excluding the top 10, end up jumping out of this descending wedge you can see here, which has happened back here in the 2021 bull run, causing the 5-wave impulse bullish pattern we like to see. And actually it also happened back over here as well in the 2018 bull run, causing, well, alt season. So this timing seems to be kind of playing out well. And of course, this is a good sign to see. And it's kind of similar to, if we have a look at Bitcoin's chart here, to what kind of played out back again in that same time frame where the start of the bull run or bottom of the bear market kind of was formed. We kind of pushed up here quite a lot. We came down, went up, came down, found a new bottom, and then pushed higher. So it's actually this period in white over here. This is the 8 weeks I was showing you before on Ethereum's chart, this previous accumulation phase. Now, why I'm pointing out on Bitcoin's chart here is just simply because this pattern of, again, the lows of the bear market coming up, coming down, up, and then finding a new bottom over here as these 3 moving averages kind of squeeze, okay, right about here before they exploded up, is because that's actually kind of what's happening again now, okay? Now, I'm not saying this is exactly what's playing out per previous history, but the patterns are pretty much identical, where we've kind of found a bottom over here-ish, right, at least based on that last sort of like 8-month sideways price action in kind of like 2024. What's happened here is we found a bottom, we've pushed, okay, if the chart lets me control it, okay, we came up here, we're down, we're up around the tariff news, the tariff pulled us down, we found this bottom, so again, the same pattern as over here. In this time, we've also seen here that the 3 moving averages have squeezed together and of course exploded up. Now, again, this white box here, where we've been moving sideways for about 6 weeks, was the same as back here. But what's even more freaky is that, like back here, what's actually happened is price action has found a nice little bottom and support here along this yellow line. Now, this yellow line is the 50-day moving average. You can see here, it respected it. We actually had a wick down here to the 100-day moving average, and then we kind of found our way back up for another push, and that push was a 76% gain for Bitcoin. Now, a very similar pattern, like I said, is playing out yet again here, which can also be very visible in Ethereum. We can even take this one step further and quickly have a look here at the MACD, which is in this line over here. It's more of a lagging indicator, and also the RSI down the bottom, which is more of a forward-facing indicator. And this same 8-week consolidation period here for Bitcoin, and over here more recently, again, kind of looks the exact same, all right? Piece for piece, if I kind of pull down the MACD, we can see here that the MACD did show a little bit more strength, okay, but kind of we had this cross earlier on. The MACD was expanding from the signal line in orange. The same thing, we had this cross. MACD is expanding. Okay, they kind of are coming to a point, all right, which came to a point not long after over here. and then we had the push out yet again. This is a very theoretical situation, but I'm just pointing out, just so you know, what a possibility is. If I pull down the MACD and bring up the RSI, a very similar pattern as well. We had like a local high over here, a local high as this move kind of finished. Okay, then the RSI line came down to the yellow signal line. The same thing, a local high over here. It wasn't above 70, so it wasn't above this point, which is overbought. Okay, but we did also coincide with the high over here. We've come down as the signal line is also coming up. So we're coming down as the signal line is coming up. So like I said, it resembles very similar things as back over here. But what is slightly worrying is actually the RSI. Now, why this is worrying is because we actually are here in a bearish divergence. You can see if I draw a trend line over this high and this high while we're putting in higher highs. Okay, what's happening here is we're putting in lower highs on the RSI. So what I'm eyeing off and hoping here for is that Bitcoin breaks this trend and we actually go into and above the red dotted line here, which is overbought in the RSI, because again, we want to actually see it show some strength. If it continues to fall in the same pattern, fails to break above the trend line here, and we do put in a third lower high, then that is not good at all. So as you can see, there are like bullish and bearish cases to be said here, but I think the patterns are very similar. Now, if I can be honest with you guys, it's not just the 50-day moving average here or the MACD or the RSI that makes me so bullish into this being a very similar time as what we experienced back in December of 2023. There are a lot of other charts that support this as well. One of those is actually this. This is the SSRO, so stablecoins versus Bitcoin. When this goes up, that means there's likely going to be a pullback here for Bitcoin. When this goes down, there's likely going to be a period of bullishness, because this just means that the stablecoins have enough momentum to help push Bitcoin higher. And this phase over here that I'm talking about compared to where we are right now, you can see a similarity being the fact that we kind of had a reset, a local bottom form here for stable coins as well. Okay, so they gave enough momentum, they had enough momentum in the tank to help push Bitcoin much higher. Now, what I'm not saying, okay, is this isn't going to be something like this, where we could go definitely lower again. It could happen. There are a lot of factors at play here more than just crypto native. We have some pretty horrible events happening, as you all know. And that brings me to the whole entire purpose of this video. It's these 4 lines, and you've heard me talk about these 4 lines on previous videos. You've actually seen these 4 lines already over here and over here. Okay, so basically what these 4 lines are my a bull run ribbon. So it's the 50-day moving average, it's the 100-day moving average, and it's the 200-day moving average here. So these 3 lines, but they're all EMAs. Now, EMAs, okay, can be toggled by going EMA in the indicator section and clicking this moving average exponential. And in the settings, you can very easily and quickly change the input to either 50, 100, or 200. Okay, just make sure the time frame calculation is on 1 day. All right, like I do. And this blue line over here is a very, very, very important line. This blue line, if crossed, if broken under, could signal the start of much more bearish momentum. So it's one that you need to keep an eye on at all times, of course, and that is the 365-day, what's called SMA. Now, the SMA is a simple moving average. All it does is just calculates, it weights all the candles in that period evenly. Okay, whereas the exponential says we're going to weigh recent price action more than the older price action in the same time period. Okay, so it's much more flexible to price movements. Now, I call these 4 bands together the bull run ribbon. And the reason why is if you actually go back the whole entire 15 or 16 years of Bitcoin's history and you pull up any time frame, you will notice similarities and patterns playing out that are still playing out to this day. First and foremost, let me be very, very brief here because I want to actually talk about kind of what we're eyeing off happening right now. Again, kind of like what happened back over here as well. But to be very brief, first of all, when these 3 bands, the EMAs, forget about the blue line for a second because the blue line just kind of is support. Okay, if I kind of zoom in, you see the blue toggle over here, 82,651. Okay, so basically that's like the last stopping point I think Bitcoin finds itself in a horrible condition. And that just most simply is because if this is broken and we close beneath it on the weekly time frame, which is what we're on right now, okay, we close beneath it, it's a very, very bad sign. It's a really bad sign, actually. But I'll pause on that for a second. Let's keep it nice and simple and look at these three moving averages. You will notice that every single time these three moving averages come together into a point and they really squeeze and tighten, what happens is that's effectively saying price right now, weighted on 50 days, 100 days, and 200 days, is relatively the same. Now, based on history, that means we're due for an explosion. Price is tightening, everything's coming in together. There's likely been, over the course of time, again, a squeezing of price, right? There's going to be a move happening soon. So that is what happened back over here in late 2023. We saw an explosion, and what Bitcoin likes to do is use the 50-day, which is the yellow line here, as support. So it doesn't like breaking beneath it, okay? You can see it's again used it to accumulate here again, and then it's bounced up. Okay, it's again fought to stay on the yellow line, but then it's obviously fallen through. All right, that is extreme weakness. And then again, it's fallen back down to the 200 and eventually found the 1 year moving average. Okay, so again, the same squeeze happened over here. This actually was a period of around 8 months where we kind of came to a point you can see here, and then we've exploded yet again using the 50-day moving average here as support. Okay, so as we began to lose steam, again, we tried, we fell through to the 100, the 100 tried, fell through to the 200 went straight through, and again, we used the 1 year, that blue line, as support. But in that meantime, these bands came together, and yet again we saw an explosion happen, as we were telling you guys on the channel. So you can see again, kind of like moving towards right now, when what you need to be eyeing off is this, the yellow line. Simply being, if the yellow line is broken right now, which you can see price the last 3 weeks has absolutely respected, if this falls down to the 100-day moving average, this orange line, based on what we know in history, if this line has a moment where the candle actually closes beneath it, right? The full body itself closes beneath it like here, and then uses the 100-day as support, it's more than likely going to fall down to the 200-day at some point. Now, that's important because right now the 200-day is $93,000. So for example, what may happen is, again, something happening in the Middle East. Okay, this coming down, the actual full body of the candle itself closes and uses the 100 as support. Maybe it comes back up to the 50-day moving average, but it's more likely to then find its way back down again at some point and use the 200, maybe even worst case, the 1 year moving average in an absolute black swan event as support before moving up yet again, okay? That would bring these bands back in together, bearish temporarily, but give it more support. Now, that's in a bearish situation. In a bullish situation, we don't really have any of that. Again, Bitcoin finds itself in this accumulation range over here, which looks the same for Ethereum, like I said, as well. And so I'm much more optimistic on that scenario. If we actually go all the way back here and have a look into the previous cycle, these bands coming together can also cause an explosion to the downside, but that only comes when the market is absolutely bearish. So if these bands ever do come together, like you can see here, these bands actually came together after a 50% drop. Okay, and what happened was the 100 in orange never actually closed beneath the 200. You can see here it got very, very close. They pretty much kissed, but that orange line never went beneath the red line. So that's a very important point. But again, you can see they came to a point and they actually exploded upwards. So that was a good sign. If they come to a point and they explode downwards, okay, kind of like what happened here, and most definitely what happened a bit later on over here, that is a sign the bull market, in my opinion, is over, because that explosive move should always be to the upside, not to the downside. You can see here a squeeze, okay, pushed up, a squeeze, pushed up. So that's always to be expected. And again, if I throw in the 1 year moving average, you can see how Bitcoin, even on the weekly, likes to respect it and not close beneath it. You can see what happens when it closes beneath it is that is a very, very bearish sign, and the moving averages also support that theory as well. Now, there is a situation where, like back over here in the previous cycle, we had a black swan event, which could be a possibility this time around with what's happening in the Middle East. We kind of had two very important indicators signal. We had these three EMAs move beneath the 1 year. That's a very bad sign. We had the 1 week and the candle here closed beneath the 1 year. Very, very bad sign. But we had a correction. Now, I think this was for two reasons. One, all right, macro went crazy. We had a bunch of stimulus. We had the Fed turn dovish. We had people being given checks for a lot of money to throw money into things like crypto. So that, of course, flipped the MO very, very quickly at that time, pushing us into a bull run. Now, if you have a look, of course, where we are right now in the cycle, it's much different to where we were back over here. Back over here, this very much so was the bear market, okay? We are very much so now into at least Bitcoin, bull run. So it's a different time. And if I'm going off basically a 100%, or if you exclude this, it's 100%. If you include this, it's pretty much a 90%, okay, win rate in terms of when the 3 moving averages cross beneath the 1 year. That is pretty much bearish, especially if price closes beneath it. Then I'm not taking any chances if that happens here, okay? I will be making videos on why I'm bearish and maybe looking at just removing some risk. Again, it's very nuanced, so I'm not going to talk about that right now. I'm just giving you guys what I look at to remain bullish or bearish in this market. If you actually have a look, the last time that these 3 moving averages went beneath or were beneath the blue line was back over here. All right, as the bull run flipped, and as you could see, March of 2023 when Bitcoin was at $23,000. And so that was kind of more like back here in 2017, we had the same thing where we had the sort of moving averages go above the 1 year moving averages, starting the bull run. So in this case, if price went beneath the blue line like this, and so did the moving averages, okay, just like if it happened back over here, I'd be very, very worried, because back over here, we did not have a black swan event like here. Same with the situation back in the previous cycle. Once they crossed above the 1 year, they never went beneath the 1 year, okay, nor did price. So like I said, it's got, excluding this, pretty much a 100% track history. If you do want more information on it and you want to ask me more person to person, I'm available in the private community in the vault. Links will, of course, be down below. So that's going to conclude this video. Keep your eyes on the 50-day EMA for Bitcoin, because it likely will tell us what is going to come next. As for the RSI and the MACD, like I said, they are showing some pretty decent signs as a repeat for 2023. So for today's emoji, I think what we do is we go for the chart emoji, but chart up emoji. Let's give Bitcoin some of that support it needs to continue higher. Of course, Bitcoin higher means we have alts going higher as well. So with that being said, thank you so much for watching to the very end of this video. I will talk to you soon. Take good care. Bye-bye.